If you like hearing about all the upcoming IPOs every week, you've come to the right place. And if there's one week you don't want to miss, it's this one. Today we'll talk about 12 companies scheduled to go public this week, headlined by arguably the most anticipated and hyped company of the year, Snowflake. Welcome to IPO This Week for the week of September 14th, 2020. Welcome to the Healthy, Wealthy, and Wise channel and our weekly feature, IPO This Week, where we talk about all the big and not so big companies going public, whether it's by traditional IPO, a SPAC, or direct listing. As always, I want to thank everyone in the community for coming back, and in this week in particular, where the number of our subscribers tripled from the week before. What an exciting week. Thank you so much. You guys kept me busy in the comments, but I really enjoyed the discussion and your great feedback. And for those of you here for the first time, my name is Kevin, and I hope that after watching this video, you'll want to subscribe and become a part of the community as well. But I know I have to prove myself first, so I'll check back with you at the end. Now, after a couple of weeks with very little activity in the IPO world, this week we bounced back with a full slate of companies to cover, including some really popular ones. And I'm talking about more than just Snowflake. I know Snowflake is the headliner, but the undercard is pretty strong as well. In fact, according to NASDAQ.com, this week is expected to be the biggest week for the IPO market by deal count and proceeds since May of 2019 when Uber went public. Now, since many of you are new to the channel, I just want to let you know what the typical format is for IPO this week. For this show, I'll give you overviews for every company scheduled to go public as of this recording. Plus, I'll go over all the upcoming lockup and notable quiet period expirations. I will tell you upfront for this week, there are no companies that we expect to have their lockup periods expire. And for notable companies that have their quiet periods ending, this week we have 4. On Monday the 14th, we have 3 biotechs, Harmony Biosciences, Inhibrx, and Chimera Therapeutics. And then on Tuesday the 15th, we have a medical device maker, NanoX Imaging. So with these quiet periods ending, we can expect market and research reports to come out from the analyst firms who have been involved in the IPO, which often are positive and could lead to a boost in the stock price once they are released. Savvy investors will keep an eye on the quiet period and lockup expiration dates for opportunities to trade the stock at better prices. For some of you newer to the channel, if you're looking for more information on the lockup and quiet periods, I have a video detailing the IPO process and how I applied it to Albertsons Companies, which IPO'd earlier this summer, and that video covers these topics, so definitely check it out. I'll link it for you. Now, with 12 companies this week, and the fact most of you don't want to watch me talk for hours, I'll be as concise as I can and give you just the most important pieces of information for each company, including the expected trading date. For companies there's a lot of interest in, I'll follow up with a separate video that is more in depth for those companies, and I'll try to release them the day before they start to trade. Obviously this week I'll have a featured video on Snowflake because I know how much interest in the company there is. And there's a good chance I'll have a second company with a featured video this week as well. I'll let you know what company that is when I get to them, so hang on for that. Please keep in mind that since information on IPOs can be fluid, where companies can get added to the calendar as the week goes on, I'll update in the comments unless someone beats me to it. And then just one final thing before we get started. Please know that while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. Alright, being that we have 12 companies to cover, let's jump into it. First up, we have Commercial Real Estate Investment Trust Broadstone Net Lease, ticker BNL, who plans to raise $603 million with their IPO. The REIT's portfolio consists of 633 properties across the US and Canada, the majority of those being single-tenant properties, and some of those tenants are names you know, such as Red Lobster, Outback Steakhouse, Siemens, and Krispy Kreme. Their portfolio includes 27.4 million rentable square feet, producing an annualized base rent of $288 million. Broadstone plans to offer a 5.6% yield at the midpoint of its proposed share price range of $17 to $19. Something to keep in mind is that only 16% of its annualized base rent came from investment-grade tenants as of June 30th of this year, and with the uncertainty in economic conditions from the pandemic, you might want to consider how commercial real estate will fare in the short to mid-term. One thing Broadstone has going for it is that their portfolio is somewhat diverse, with 44% being industrial properties and 20% being in healthcare, two of the areas that haven't been as negatively impacted by the pandemic on an ongoing basis. The remaining part of their portfolio that might be a little more exposed due to the current conditions, including the work-from-home trend, include 10% in office space, 15% in restaurants, and 9% in retail. Just something to consider when looking at potential risk factors. As of now, we expect the IPO to be priced on Wednesday with trading to begin on Thursday the 17th. Note that the dates on your screen are for all of the company's IPO date where pricing is set and then trading usually beginning the next day. I don't want anybody to be confused on that. Let's jump into the medical side of things next with a biotech named Medecrine, symbol MTCR, who plans to raise $85 million at a $364 million market cap. The company is developing differentiated therapies for liver and GI diseases and is currently in a phase 1 trial for its candidate therapies for non-alcoholic steatohepatitis, commonly referred to as NASH. If you don't know what NASH is, it can be defined as liver inflammation and damage caused by a buildup of fat in the liver where it can get worse and cause scarring of the liver, often leading to cirrhosis. NASH is similar to the kind of liver disease that is caused by long-term heavy drinking, but in this case, alcohol does not cause it. You will want to keep in mind when considering the company that while there are no approved therapies for NASH, several competitors are in later stage trials, so potentially closer to getting something to market than Medecrine. Again, the company is looking to raise $85 million with their IPO, with pricing expected to be between $12 and $14. As of today, we expect the IPO to occur on Tuesday the 15th, with trading beginning on Wednesday. Sticking with medical companies, we have Outset Medical, ticker OM, who plans to raise $175 million at a $1 billion market cap. The company provides a hemodialysis system for acute care and home settings designed to be lower cost and easier to use than competitors. The company sells an integrated system called Tablo, which is composed of a console with integrated water purification, a single-use cartridge, and Tablo connectivity and data sharing. The benefit of the system to clinics and other healthcare facilities is that they no longer need a dedicated water cleaning system just for dialysis purposes. Outset is still commercializing in the home market, for which its device was approved in March of 2020. Having that approval was big for the company and in your assessment of it. At this point, the company has been highly unprofitable, generating negative gross margins to date and burning through a lot of cash, although they are starting to show stronger revenue growth. According to a 2017 market research report by Grandview Research, the U.S. market for hemodialysis and peritoneal dialysis reached $60 billion in value in 2015 and forecasts a compounded annual growth rate of 6% from 2015 to 2025. The main drivers for this expected growth are a rise in the incidence of renal system failure among an aging population and increased availability of services and new devices. I had a good discussion in the comments of another video from someone who asked about Outset Medical, and my initial thoughts were that if they have a cost-effective solution that allows people to have dialysis at home, they are going to pull in a ton of insurers to use that option versus having to pay the expense of 3 days per week to a costlier outpatient clinic, while also eliminating the cost of transportation that people with end-stage renal disease often need. Obviously, the key is if they can execute on that. Of the $175 million they look to raise, about $77 million is slated to go towards marketing and sales, $34 million for research and development, and the remainder going towards working capital and other corporate purposes. We expect the IPO on Monday with pricing between $22 and $24, with trading to then begin on Tuesday the 15th. The next one on the list is another early-stage biotech, Dyne Therapeutics, ticker DYN. The company is developing therapies for rare muscular diseases such as myotonic dystrophy type 1 and Duchenne muscular dystrophy. The company is in the preclinical stage, which means they haven't entered into phase 1 safety trials as of yet. So obviously they are years away from bringing anything to market, and that's even if everything goes well. Clearly something you want to consider before jumping in. And being at this stage in the company's development, they obviously don't have any revenue to speak of. Dyne plans to raise $175 million at a $782 million market cap, with the IPO set for Wednesday and pricing expected to be between $16 and $18. Trading is slated to begin on Thursday the 17th. Next up is American Well Corporation, or Amwell, ticker symbol AMWL, a telehealth provider who plans to raise $525 million at a $3.6 billion market cap. Not surprisingly, the onset of the pandemic drove demand for the company's system, with a 300% increase in total monthly telehealth visits in Q2 2020 from Q1. The company allows customers to add to existing healthcare plans and providers with subscription-based tools and other services. Right now they are pretty unprofitable with a large accumulated deficit, but the company is benefiting from revenue growth from the accelerated adoption of telehealth services caused by the pandemic. They do have competition in the market, with Teladoc being the telehealth company having the top brand name recognition. For the industry in general, according to a 2020 market research report by Markets and Markets, the global market for telehealth software and services is expected to reach $55.6 billion by 2025, up from a forecast of $25.4 billion in 2020, which amounts to a compound annual growth rate of 16.9%. The main drivers for this expected growth are reported to be a sharp increase in the monitoring of chronically ill and elderly patients and improved telehealth monitoring devices and connectivity, while providers also continue to offer an increased number of specialty services remotely as they seek to improve care quality while increasing productivity and reducing costs. We expect the IPO on Tuesday with pricing anticipated to be between $14 and $16, with trading to then begin on Wednesday the 16th. Getting away from health-related companies, we have Pactiv Evergreen, ticker PTVE. The company has gone by a variety of names since 1959 and is the largest North American maker of packaging for the food service, food merchandising, and beverage industries, and according to NASDAQ.com, has a number 1, number 2, or number 3 market share in 80% of its products. According to management, the company offers more than 13,000 products produced by 900 production lines. The company sells its products through distributors and directly to major global companies, with its customers including McDonald's, Starbucks, Tyson, Kraft Heinz, and Coca-Cola. From information posted on TheStreet.com, according to a 2020 market research by Grand View Research, the global market for food packaging was an estimated $303 billion in 2019 and is expected to grow at a compound annual growth rate of 5.2% from 2020 to 2027, with the expected growth coming from an increasing desire for food and beverage convenience, greater performance, improved shelf life, and a reduced environmental footprint. The company plans to raise $800 million at a $3.4 billion market cap, using its IPO proceeds to pay down debt versus growing the company. Always a little red flag for me. The IPO is scheduled for Wednesday with pricing to be set within a range of $18 to $21. Trading will then begin on Thursday. The next one I'm just going to briefly mention is Vitru, ticker VTRU, a Brazilian digital education provider. According to NASDAQ.com, the company is a leading post-secondary digital education provider in Brazil, offering distance learning products as well as in-person tutoring services. The company's margins expanded in the first half of 2020, though revenue growth has decelerated. From TheStreet.com, Vitru's recent financial results can be summarized as the company having growing top-line revenue, increasing gross profit, but lowered gross margin percentage, a swing to operating profit and margin, and increasing cash flow from operations. The company plans to raise $258 million at a $541 million market cap. Pricing is expected to be set on Wednesday between $22 and $24, with trading then beginning on the 17th. Another one to briefly mention is StepStone Group, ticker STEP, a global private markets investment firm that provides customized investment solutions as well as advisory and data services to clients. According to NASDAQ.com, the company oversaw $292 billion of private markets allocations as of June 30th of this year, though apparently its operations were hit hard by the pandemic. StepStone plans to raise $280 million at a $1.6 billion market cap at its IPO on Tuesday, with shares expected to be priced between $15 and $17. Trading will then begin on Thursday. Now to the 4 biggest names left on the board, and not surprisingly, they are all tech companies. Let's start off with Sumo Logic, ticker SUMO. Don't you like these easy symbols to remember? The company was founded in 2010 to develop log management software to enable organizations to continuously monitor and respond to their IT infrastructure in real time. The company provides a monitoring and analytics platform through a subscription-based service to its more than 2,000 enterprise customers of all sizes, including big ones such as Alaska Airlines, Brown University, JetBlue, Land O'Lakes, LendingTree, Major League Baseball, Netflix, Petco, Salesforce.com, and Ulta Beauty. The cloud-native platform has operational, security, and business intelligence capabilities and is referred to as its continuous intelligence platform. According to a 2020 market research report by Research and Markets, the global log management software market is expected to grow from $1.9 billion in 2020 to $3.7 billion in 2025, which represents a forecasted compound annual growth rate of 14.1%. Some of the factors driving this expected growth are a growing reliance on IT infrastructure, application sprawl and complexity, and the increasingly large amount of data generated by businesses. When thinking about the industry as a whole, we have to consider who they are competing against, and some of those companies include heavyweights like Amazon Web Services, Microsoft Azure, and Google Cloud. However, for more direct competition, Sumo Logic names Splunk and Elastic as their primary competitors in their S1 filing. While Sumo Logic has been unprofitable and expects to be so in the near future, The company is reporting strong revenue growth from 2018 through 2020, starting from $67.8 million in 2018, increasing to $103.6 million in 2019, and then growing to $155.1 million in 2020. They also have a strong gross margin that has been over 70% for the past 2 years. If you're looking for a fast-growing tech company, this is one to consider. The company plans to raise $281 million at a $2.3 billion market cap at its IPO on Wednesday, where pricing is expected to be set in a range from $17 to $21. Sumo Logic will then start trading on Thursday. Next up, we have a company that sells software tools to help streamline app development named JFrog, ticker FROG, another easy one to remember. This is a company that we talked about some last week. JFrog was founded in 2008 with the mission to develop an integrated and full-featured system to enable software development and IT operation teams to more quickly and easily develop and deploy new software releases. The company touts that they built the world's first universal package repository named JFrog Artifactory, which fundamentally transformed the way that the software release cycle is managed, saying that their package-based approach to releasing software allows releases to be continuous and software to always be current. In their filing, the company did mention that due to the pandemic, they have experienced slowed growth and expect to experience slowed growth or even a decline in new customer orders for the platform, as well as lower demand from existing customers for upgrades within the platform, primarily due to changes in customer spend patterns and IT budgets. Yet at the same time, they have also reported signals that indicate the acceleration of trends in support of digital transformation, development ops, and the transition to the cloud. And also, they've reported that they have generated a record number of new business leads during the second quarter of 2020. Another positive bit of information is from a slightly dated 2018 market research report by Markets and Markets, forecasting a strong 24.7% compounded annual growth rate through 2023 in the global market for DevOps software, citing reasons of an increasing need for continuous software release capabilities as organizations seek to gain an edge through their superior software system operation. Currently, the company has over 5,800 customers and has experienced strong growth in revenue. From their filing, they note that while they have achieved positive operating cash flow and free cash flow for each of the past 5 years, they still have incurred losses in all years since their incorporation. The IPO is set for Tuesday, where JFrog expects share pricing to be set within a range of $33 to $37, which at the midpoint would raise $405 million at a $3.6 billion market cap. After that, public trading is scheduled to begin on Wednesday the 16th. Up next, we have Unity Software, ticker symbol U, a leading software platform for creating and monetizing video games. Their platform provides a comprehensive set of software solutions to create, run, and monetize interactive, real-time 2D and 3D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. As of June 30th, 2020, they had approximately 1.5 million monthly active creators in over 190 countries and territories worldwide. The applications developed by these creators were downloaded over 3 billion times per month in 2019 on over 1.5 billion unique devices. Unity is responsible for about 53% of the top 1,000 games in Apple's App Store and Google Play. Because the IPO is set for Thursday with trading beginning on Friday, I plan to make a featured video for the company to come out before it hits the market, so be sure to look out for it. Better yet, have your notification bell turned on so you know right when it comes out. But as a preview to that video, some highlights of the company's financials include increasing revenue and strong gross margins of over 70% in the past 2 years. They do have significant operating losses due to high research and development costs, including those costs being up 40% from the previous year. Now recently, they have shown a reduction in the amount of cash use in operations, although in their filing, they state that that can fluctuate. The biggest reason to expect the company to continue to grow is that there is a large global gaming industry market that looks to continue growing in the double digits year after year through at least the middle of the decade. With pricing expected to come within a proposed pricing range of $34 to $42, at the midpoint, the company plans to raise $950 million at $11.7 billion market cap. Again, look for trading to start on Friday. And barring any unforeseen circumstance, I'll have more information to share in that upcoming video I mentioned. And last, but certainly not least, we have cloud data warehouser and certified unicorn, Snowflake, ticker symbol SNOW, finally set to begin trading on Wednesday. For many of you, the long summer wait is over and snow is in the forecast. If that just made you roll your eyes, I get it, but I just can't help myself sometimes. Planning to raise $2.2 billion at a $28.2 billion market cap, Snowflake is by far the largest deal of the week. In a surprise twist, The company revealed last week that they plan to raise over $800 million from Warren Buffett's Berkshire Hathaway, as well as from Salesforce in a concurrent private placement. Because of the amount of interest in the Snowflake IPO, this isn't my first video on the company. You can see other videos that I've made by checking out a Snowflake playlist I've created, which I'll link for you. For today, I'll give you an overview of the company, but rest assured, I will have a comprehensive video coming out on Snowflake on Tuesday where I'll talk much more about the company and I'll look at what I believe are the pros and cons of the IPO. For today, we'll stick with the background of the company and some of the highlights of the data. So as most of you know, Snowflake provides a cloud-based data warehousing platform. The company is based in California, founded in 2012, with a vision of creating a data-connected world where organizations have seamless access to explore, share, and unlock the value of data. They are pioneering the Data Cloud, an ecosystem where Snowflake customers, partners, and data providers can break down data silos and derive value from rapidly growing data sets in secure, governed, and compliant ways. To do so, their cloud-native architecture consists of 3 independently scalable layers across storage, compute, and cloud services. The storage layer ingests massive amounts and varieties of structured and semi-structured data to create a unified data record. The compute layer provides dedicated resources to enable users to simultaneously access common data sets for many use cases without latency. And then the cloud services layer intelligently optimizes each use case's performance requirements with no administration. This architecture is built on 3 major public clouds, which I'll get to in a second, and across 22 regional deployments around the world. These deployments are interconnected to create a single cloud data platform, delivering a consistent global user experience. Snowflake says it has 3,117 customers as of July 31st of this year, including 146 of the Fortune 500 companies. Some of the bigger name customers include Capital One, Sony, Office Depot, DoorDash, Instacart, Adobe, DocuSign, Micron, and Dropbox. So you can see they are involved with customers in a variety of industries. Well, the company is still not profitable with a net loss of $348.5 million for the fiscal year ended January 31st, 2020. The company is reporting significant growth in recent years. And when I say significant, I mean significant. For the fiscal years ended January 31st for both 2019 and 2020, the revenue grew from $96.7 million in 2019 to $264.7 million in 2020, representing year-over-year growth of 174%. That type of growth is what's getting everyone's attention. And gross margins are continuing to improve as well. Again, for the fiscal years ended January 31st, 2019 and 2020, the gross margins improved from about 46% to 56%. Also adding to Snowflake's appeal to investors is the company's CEO, Frank Slootman, who joined the company last December. He has a reputation for making money on taking private companies public. Previously, he was chairman of ServiceNow, and before that, he was also successful in taking Data Domain public in 2007 before selling it for big money just 2 years later. On the competition side, they do go head-to-head with some of the heavyweights of tech who have their own cloud data warehousing services. These include Amazon's AWS Redshift, Google's BigQuery, and Microsoft's Synapse. But as I mentioned in a previous video and alluded to just a minute ago, Snowflake actually is a customer to those same 3 companies because their platform operates on the public cloud infrastructure provided by Amazon Web Services, Microsoft Azure, and Google Cloud Platform. It really is an interesting dynamic and one to think about when it comes to pricing between the companies. The Snowflake IPO is set for this Tuesday, where it expects its shares to be priced within a range of $75 to $85. And then it's off to the races on Wednesday when it hits the public market for the first time. Again, I will have a more detailed and comprehensive video coming out before trading begins, so definitely watch out for it. Well, this was a long episode. Thanks for hanging in there. I hope you enjoyed it, and if you did, please hit that like button and share with your friends. And for those of you here for the first time, I hope I convinced you to join the community on the type of content I deliver. After all, it's totally free. You just got to press that red subscribe button. We'd love to have you on board. On that note, let's wrap it here for now. Thank you for watching, and until next time, have a great day.